interchangeable. Sometimes I'll say management accounting, sometimes I'll talk about managerial accounting. But today I want to talk to you what this course is all about and how it's related to management. You are all right now business students, so effectively you are students of management. Sometime in the future, when you're working, you will be in the role of a manager. So what is that role? Well, you see, it's not just one role. You as a manager must perform many different activities and responsibilities in doing your job. And when you look at all those activities that a manager performs, or the responsibility that a manager has, you can divide them into 4 different broad functions. First of all, as a manager, you're managing a segment of a business. You must plan the future as to what you're going to be doing. What are the objectives? What are the goals for the area that you are managing? So that is planning. And that's a big part of the manager, looking into the future and try to plan the activities that they will be performing in the future. Also, as a manager, you probably are directing other people's work. And so sometimes, or part of your duties then is to make sure other people know what is expected of them. You are to train them, help them learn. Thirdly, you are handling the operations of the business. You are directing employees and planning, but you must also control what's going on. You just can't plan and direct. You must check on that. You must evaluate. Are they performing the duties that they are required to do? Is there something wrong here? All right. And if there's something wrong, of course, you must plan to put them back on track. So you're planning. Basically, this course is a course of planning and controlling. And that's the 2 broad areas that you as a manager would perform. Lastly, you're called on to make decisions. You have to evaluate alternatives. The fact that you have to make a decision means you have at least 2 alternatives: do something or do nothing. And so therefore you must decide what course of action that you should take. So those are the 4: planning, control, each one of these functions individually. And we start off with the planning function. Here as a manager, you must plan the activities for the area you are managing. What does that mean? It means you must look ahead into the future. You're dealing with the future. And you must establish some goals or objectives that you want to achieve in the future. And those goals could be defined as maximize short-term profits or commit to environmental protection, any other. You have different goals that you want to achieve for your area. And you have to make a decision, you're going to have to make plans to achieve those goals. Your purpose here in planning is not just to fill the time of the employees you are managing. Your purpose here as a manager is to add value to the business. Do you understand what we mean by that? You must add value. You must plan operations to improve on business operations, to achieve some value. All right? And what do you mean by value? Means you could be improving on the bottom line. The bottom line is profit. And improvement implies 2 different terms. You must be more efficient in managing the activities you manage. You should be more efficient, or you add value by being more effective. Okay, so the idea is to add value. Now, I want to back up a little bit here and explain what we're doing. Here you have what you're familiar with is an income statement. Now, you learn this in financial accounting. And this income statement, Paul's Guitar Shop income statement for the year ended and so on, is in two categories. Revenues, those are the revenues that Paul's Guitar earned, $27,800, and expenses. And those expenses are listed: cost of goods sold, depreciation, wage, rent, interest, and total amount $14,850. And you subtract those two and you have your net income. Now this income statement is prepared, as you learned in financial accounting, once a year. Every company has to prepare and publish an income statement once a year that follows generally accepted accounting principles. And that's what you learned in financial accounting. You learn the system on how to put all of this together. You learn how to record business transactions and how to classify them in the ledger and how to summarize them on the income statement. And you learn the debit and credit system. Okay. Now, when we're talking about management accounting, in relation to accounting, you know that you produced a balance sheet in financial accounting and an income statement. Now, the balance sheet, if you recall, listed the assets, what the company owned, who they owed money to, and the balance being available to the shareholders. So you learned how to finance those assets by issuing debt or borrowing money. Those are financial aspects. We have nothing to do with that in management accounting. I want you to focus that management accounting is based on the income statement. But we don't call it an income, we refer to it as a statement of operations. We look at the income statement as a statement of operations, and management accounting is all about improving business operations, adding value. Remember, you as a manager, you must add value. So when we talk about the income statement, think of it as a statement of operations. Now, the first part of the statement is the money that came in, and the second part of the expenses is the money went out, and the net income. But we changed the language here. The terms we use in management accounting, we hardly ever use expenses. And please don't worry, we don't do any debits or credits or journal entries or anything like that. None of that is in this course. We refer to the expenses as costs. All right. Now, when you learn financial accounting, you only had one definition for expenses. That is the amount of that was used up, for example, wages and rent, to earn the revenue. So the definition of expenses is that which is consumed in earning the revenue. In this course, though, we don't talk about expenses, we refer to them as costs. And you are going to learn about 6 or 8 different definitions of costs, because we want to know how costs will behave in the future. We want to be able to predict costs. So a lot of what we're going to learn in management accounting is how to understand costs. And what would the cost be if I increased operations? Okay. Now, we also look at a statement of operation as the revenue is referred to as the output of operations. the result of all the selling activity, what we produced and sold. We refer to that as output. And of course, then we refer to the expenses as inputs in order to achieve the output. So I said that it's important that you add value to the business, and you do that by being more efficient. Well, how are you more efficient? Well, you're more efficient if you can achieve the same outputs with less inputs. So if you can achieve the same results as you did the year before, but less in terms of costs, you're being more efficient. Or as a manager, you could be judged on effectiveness. And effectiveness means you get more output for the same amount of inputs. So you see the definition of efficiency and effectiveness are related to outputs and inputs. And of course, you have to make decisions. All right. And the decisions, of course, have to leave the company better off. So that is what I'm talking about when I'm talking about planning. You must plan the operations to add value. How do you add value? You become either more efficient in operating, that is, you get the same output with less inputs, or you become more effective in managing by achieving more output with the same input. And that's the planning function. That's your role as a manager. Now, directing activities for your responsibility means that you're coordinating the activities of the people that you are managing. You make sure that your planned objectives are being met. You provide incentives to motivate people. You hire and train employees. Now, this management function is more related to the area in which you're managing. If you're in HR, then you're directing the activities that would be done in HR. If you're in production, you'd be directing the activities. If you're in marketing, you'd be directing the activities in marketing. So this management function is related to your area of expertise, IT, marketing, production, maintenance. Management accounting doesn't have many tools to help you here. These are more related to the function you're in. However, controlling is a major part of your responsibility as a manager. You have planned the goals, the objectives. We're working towards them. How well are we doing? Are we on track? Are these goals being met? All right. If we're not on track, then what do we have to do to get back on track? Now you're evaluating the performance of the employees you're looking at here. There are formal evaluation systems, which you will learn in this course, later on in this course. We have many tools here to help you evaluate performance. There's also informal. You're walking around and you're viewing what they're doing and making sure. All right. So you're controlling. And then the fourth area, of course, is decision making. And as it says here, good decision making is the outcome of good judgment in planning, directing, and controlling. Okay, so this is the field known as management or managerial accounting. It is part of every accounting program. An accountant sometimes is wearing the hat of a financial accountant, sometimes is wearing the hat of a management accountant. But this is a field of accounting that provides financial and economic information to managers, only managers, not anybody outside the business or any other internal users, managers and other users. All right. So that's the formal definition of managerial accounting. But I want you to think of this course as a series of tools. You've got a toolkit now as a manager. And instead of having a hammer and a saw and a screwdriver and stuff like that in your toolbox, you have management accounting tools designed to help you in your role as a manager. There are planning tools and controlling tools and decision-making tools. Now, those tools are what this course is all about. So in planning, managers must know the costs and how those costs change when activities increase or decrease. So in this course, you're going to learn cost behavior, cost volume profit analysis. These are all tools to predict what would happen in the future. You're going to learn how to produce a contribution margin income statement and perform contribution margin analysis. And a big part of our course will be budget planning. Each one of these tools are different. Each one of these tools we will cover in this course, and you will learn the tool, which is pretty simple and straightforward. But not only will you learn it, you will be asked to apply it to a particular business problem. And that's where we work together and improve on our skills on applying these tools. When we're controlling operations, you as a manager must evaluate performance of the people you are managing. Now, the tools in this course that help managers control operation, we're not going to do cost accounting systems, but we're going to look at what's called responsibility accounting, standard costing, variance analysis. You're going to learn how to create performance reports. And the last part of the course is something called the balance scorecard. All of these are reports, formats on performance evaluation. So at the end of the course, you'll be familiar not only with these terms and concepts, but on the types of reports that are produced. And lastly, or next, is the decision-making tools. Here, managers change their focus from costs to cash, to flus. They look at cash flows. And techniques that help you make informed decisions. You learn to identify the problem, develop alternatives to solving the problem, apply analytical tools such as incremental analysis, differential analysis, or relevant costing, and make a decision. And remember, your decision must be that the company is better off because your role is to add value. So that's what we're doing here. That's what this course is all about. I don't know what you think so far. But basically, we do cover a lot, but you will learn the language of managers and you will learn the tools and techniques they use to plan and control and make decisions. Now, what are some of the types of managerial activities? These are very general. You must gather and present relevant data to managers so that managers can make decisions. You look at the alternatives and you develop ways of, in this case, cost and inventory. You look at other factors, not just accounting. You look at economic factors, external factors, and stuff like that. You help the managers in each of the area develop a budget. So you assist in profit planning and formalizing their budgets. You help managers control costs by preparing what actually happened to what has planned to be happening. You'll learn that. That's a lot of variance analysis. And so on. Those are some of the activities you would as a manager. Now, I want to compare managerial accounting to financial accounting. You're familiar with financial accounting. Well, this too is accounting, but its focus is quite a bit different than financial accounting. Its purpose is quite a bit different. However, the similarities in both financial and management, we deal with economic events of a business. And both require that we quantify these economic events and communicate them. Okay, in financial accounting, of course, you communicate it these economic events in the form of a balance sheet and an income statement. In management accounting, there are many, many reports. And so therefore, this slide gives you an idea of the difference between financial accounting on the left and managerial accounting on the right. Financial accounting, of course, you are preparing financial statements so that people outside the business can understand what has been going on in the business. Of course, you prepare balance sheet and income statement. In management accounting, you are communicating the data only to managers. We don't want anybody outside the business to know what our costing is and our plans, our marketing plans, or budgets, or anything like that. In financial accounting, you prepared quarterly income statements, and every company has to prepare a financial statement for the whole year. But in management accounting, there are many reports. The marketing manager want to report on the sales in Oman last year. The IT manager wants to know about what the budget is for money to purchase new equipment, and so on and so on. So you prepare a report as requested by the managers when you're wearing a managerial accounting hat. Okay. Now, the type of report is very specialized. It's a marketing report, it's an IT report, it's an HR report, very specialized, pertaining to a specific area in the business. The reports in financial accounting are very general. It's for the company as a whole, all right? Whereas managerial accounting pertains to sections within the business. Of course, managerial or financial accounting has to follow generally accepted accounting principles and be audited. There's none of that in managerial accounting. We simply look at the cost and the benefit of doing things in a different way and whether it's relevant to any decision we make. There are no internal audits with regards to management accounting. And so that completes basically an overview. You think you can see, hopefully. Now, I want to make a point. Financial accounting is recording what actually happened, and it has to be exact. And so when we talk about an actual cost, it means that that cost actually occurred, and we can measure it. We know exactly how much it is. But in managerial accounting, we're not dealing with actual costs or actual value. We use the term budgeted events, okay? Or planned costs, budgeted costs, forecasted costs. So you see managerial accounting, the language changes. It's about the future. Now, a forecasted cost is not actual. We're guessing at exactly what it would be. And when we guess, we're either going to be high or we're going to be low. It might be right on once or twice. But nevertheless, it's a forecasted, it's budgeted cost. It's not actual. So we compare actual against budgeted all the time.